Hello everyone, Fadi Dabaja, Remax Leading Edge. Just wanted to share something with you real quick. I was on the phone with a potential client and we were discussing a few things, and he brought up transfer taxes and how if you pay transfer taxes at closing, you are technically paying the capital gains tax because it's the profit that you made at closing. A lot of people believe that the transfer tax is the capital gains tax. It's not. Transfer taxes are taxes that you pay to the county and to the state at closing to transfer the property from one person to another. It's a tax that the state and the county charge whenever there's a transfer of ownership. Capital gains tax, though, is the tax from the IRS that taxes the person on the profit based on how much you purchased the property for, plus whatever you put in there as in rehab or expenses that you want to put in. Take that together, that's your total investment. When you sell the property, whatever the difference is from the sale, the net proceeds after your closing costs and whatnot, whatever the net proceeds are from the sale of your property, minus whatever you're all in on the property when you first purchased it to the day you close on it, that's the capital gains tax. That difference, which is the profit from the all-in expenses to the net proceeds, whether it be $10,000, $1 million, $5, there's a capital gains tax that gets charged to you when you file your taxes the following year. It doesn't happen or occur at closing the day before, the day of, or anytime near that. You take your documents, all your closing documents, the deed, the HUD, plus whatever expenses you incurred, you take all that to your accountant, unless you do the accounting yourself and you do your own taxes, and then you calculate what your all-in expenses are, plus the cost of the home, and then at the end, whatever your closing costs are, minus all your expenses, and whatever that difference is, whether it be you purchase something for 50, you put in 10 grand into it, you're at 60,000, you sold it for 100, after your closing costs, your net proceeds are $90,000, there's a $30,000 difference there. That $30,000 difference is your profit. That $30,000 profit is what you will be charged at for your taxes next year. Not now. It's not the transfer tax. And depending on a lot of other circumstances, you can be taxed 15, 20, 25, 30% on that amount. So if you want to know the difference between transfer tax and capital gains tax, that's what it is. Transfer tax is a tax that the county and the state charge for transferring ownership, and it's a certain amount. Then depending on the sale price, there's a certain percentage for it. And the capital gains tax is what you get taxed on for the profit from the IRS, the federal government. So that's basically the difference, and please don't confuse the two because they're completely opposite. And I don't want people to think that you're just paying $500, $600, $700, $1,000 at closing, and that's it, you paid your capital gains tax, because there's a lot more that came from the IRS. Nothing I can control, nothing you can control. The IRS charges a capital gains tax to everybody. It's normal. It's part of the process. There's ways to get around that, 1031 exchange, putting it onto other real estate. You can discuss that with your accountant or your CPA, and they can go over that information with you. They give you the tips and tricks to do that. Maybe another time I'll let you guys know how my clients work their way around those tax repercussions. But yeah, that's about it. Transfer tax, capital gains, two separate things. All right, see you later.